Yo, what's up? What's good? Hope everybody's doing well. Today is February 19th, 2024. And yes, we do have a market that is going. We have some alts that are doing some nice things currently. A little pump action. Bitcoin chilling at 52K. Ethereum now trying to touch that lovely $3,000. And, other coins doing some things as well. So, the question is, who do we need to be watching? What do we need to be watching as the bull markets continue to be a bull market? We understand the crypto seasons, right? We talked about that a couple streams ago. We are in crypto summer, so we've experienced the crypto winter with everything happening. So we're talking about same thing: Luna, Three Oaks Capital, FTX, all that stuff, Celsius, all these things kind of going belly up. We've transitioned through 2023, which is like crypto spring. That's like, post chain coming out and all these things kind of slowly developing. And we've gotten into crypto summer. And that's as of October of 2023 till now. We have, Bitcoin running, Ethereum running, but then also the other alts now starting to gain liquidity. So what do we need to be watching? Who do we need to be watching? What market participants should we pay attention to once we've kind of transferred into summer, but then going through the rest of crypto summer into crypto autumn? And I think I have the answer for us, and we'll definitely get towards that. So appreciate y'all for coming through, man. We got a lot of great stuff ahead of us. And, there's excitement in the air, as always. When prices are going up, everybody tends to kind of walk around with a little extra pep in their step. And the new people that are coming in, guess what? You still got opportunity here. With the halving still kind of abreast, we got that halving coming up in another 2 months or so. Typically the asymmetrical returns are kind of still there as long as you're investing before the halving. Risk is going to increase after that, y'all. So keep that in mind as you guys are kind of rounding out your portfolios. And yeah, man, get ready to put on the cool shades on, enjoy the memes, and let the games begin, y'all. So things are looking really nice. The question is now, what are you guys willing to do, right? So what are you willing to do? Like in this next 2 months, are you willing to work some extra hours? Are you willing to say, okay, cool, let me maybe not spend this extra $300-400 on, these Nikes or whatever the case may be, and put it into something that could actually get you, 10 times more in a time span of a year and a half to 2 years. So can you just delay that gratification just for a little bit longer and get in an asset that's going to print you 10 times more of the thing that you maybe want right now? That's kind of how you got to think about it, because that's how exponential crypto is, and that's the thing is like, I was having a consultation just now, and something that we kind of ended the consultation with is like, hey, like, now where can things go? And that's kind of doing a little bit of moon math. And the thing that I was kind of saying is it's like, you'll be surprised, that last little $300 or that last little $500 into like that last little play, that last little coin, you'll be surprised. At one point, now it might just be $500 or $1,000, but then who knows, maybe in a year and a half time span, it can do something that you could never expect. It could buy you a car. It could pay off a student loan. It could do all kind of things. And so, but you wouldn't have the opportunity if you didn't just say, hey, let me try to do a little bit more before things get crazy, So there's opportunity costs here within crypto. And the opportunity cost is going to be, hey, how long am I going to wait? And that's just what it is. How long do you need to see prices to go higher and higher? And every stream that I've done, the prices keep going higher and higher and higher and higher. I get asked about a dip all the time. And the key thesis is, yeah, sure, we may get a dip later on, but that dip will be at a higher price than where it is today. So you want to wait with a whole lot of capital on the side? That's proving to be not the best way to go about handling a bull market. So time sometimes is more important than price. So we've talked about that. Today, I want to talk about a certain cohort of people who are going to be interacting in these markets time moving forward. We'll talk about a little bit about how we can kind of use them to let us know, hey, here may be some fair value time periods to DCA if we are DCAing within the bull market, and what are just the ways that we need to see things moving forward. So that's one of the key things for sure. So let's start to get into it. I appreciate y'all for coming through. Like and definitely subscribe if you haven't, and let's get going. So let me jump in. First things first. we will pull up, and let me move myself out the way just a little tad more. So we'll pull up and kind of rehash what we've experienced and talk about where Bitcoin is now. So in previous time, we have experienced Bitcoin go and touch 65K, 69K, thereabouts in 2021. And now a lot of retail investors wanted to come in, not so much on this peak here, but mainly this peak here. And we're literally talking about a time span of maybe just a couple months, like from like October to, let's call it, December. So 3 months when they all wanted to be active in crypto and wanted to get all these meme coins and all the other stuff out. And surely things go belly up. And so we had some big capitulation candles coming to the downside. But we had a resurgence where people were like, oh, it's over. We're going to go back up and have a third top. And we had, a bit of a fake out. We got back up, last little bit of leverage, last bit of people that are like super late to the party trying to come in. But the sell pressure is just too high. And then we come off Luna, sell off, FTX, sell off. And then we have the refresh. And so as we trek back up, a couple things. So Bitcoin has eclipsed the 0.618 on its Fibonacci retracement, meaning that it has already corrected back up 64% of the move from going from 68K to 15K. And that typically does not happen and sustain itself before the halving. But yet we've done that here. So that's an interesting thing to think about thus far. Now, here's the key thing, and here's the key sauce. And I kind of explained this in the last stream. Is now we've owned like above this price of 50K, and it's even smaller, with us being now at 52K, less than 2.84% of Bitcoin's history. So 2.84% of Bitcoin's history has been above this price. So what does this mean? Meaning that the amount of interaction that people that have been able to even hold Bitcoin has been very minimal at these prices. And so that means there's going to be typically less volume. And if we were to look at this on a chart, we're able to see that there's a lot more of accumulation. So basically what happens is the people who did buy up here, guess what? They're not in the market no more. And their coins got redistributed to long-term holders like myself and everybody in the vaults of crypto. So all of us, and as of right now, I want to say it's like 22 of us, 23 of us, right? Go ahead and join, you guys. You guys can get an immense value because, yeah, we talk about some things here, but we go into way more depth inside the vault. But I digress. So now, when these long-term holders have, then guess what? The likelihood of them selling at these valuation, because they're not trying to think about, all right, let me just go ahead and get my break even. Like those people have already sold at a loss, which we'll go ahead and look at. And then so now, really, truthfully, we're more so into price discovery, believe it or not. And that's a beautiful thing. So we can see the journey. We've already trekked back up majority of the price move. And keep saying, if you find yourself investing after BTC hits its all-time high, you can do it. Understandable, but just think about it. The risk to return ratio diminishes greatly after that point. So, or return to risk ratio. So here's the thing. Let's talk about these guys. So who do we need to watch? We need to watch how the institutions continue to buy up this ETF. And so Grayscale being one of the ones to watch. We need to watch BlackRock and we need to watch Fidelity. So as of right now, they are the largest inflow that we have as far as BTC, meaning BlackRock and Fidelity. And Grayscale, they're selling, but just not as much. So what do we have here? Basically, we got to understand that like the positioning of the long-term holders and how are they rebalancing throughout this journey. And so a couple ways to kind of look at this is currently the long-term holder supply is sitting at quite a bit of Bitcoin. Like, these guys essentially got, 14 million. So that's a lot of BTC. And that's rising through time. And so the biggest thing is like the redemptions that have been kind of going on for GBTC. The redemptions is about 150,000 BTC. 50% of the total long-term holder supply, has declined in that time period. And so now the thing is now the rebalancing of, okay, so these coins maybe not just going to sell spot, but now going to other firms. So going to from GBTC to BlackRock and Fidelity kind of brings us with a little bit more of a rebalancing. And so the interesting thing is this, as the long-term holders essentially are kind of like, okay, maxing out for a little bit of time. So since the beginning of the year, they've kind of maxed out. Even with the rebalancing, price has continued to trend higher. So what does that mean? There's some other players that are now starting to activate their interest in BTC, and we'll talk about them. So things to pay attention to. So this is kind of what we're talking about, supply discovery. And let's read what they have here for this article with Glassnode. So supply discovery, as the market marches higher, a super majority of BTC has now moved into a profitable state. So super majority is like basically almost 90%. So here's what it says. In fact, only 13% of the total supply were acquired above 48K. And so that's even less now since we're at 52K. And therefore held in a state of loss. So the chart below presents a breakdown of the Bitcoin supply by the cost basis at which it was acquired. We can see that the vast majority of the 87% of coins were accumulated below 48K, first of all. So we got support there below 48K. With a very large cluster of the short-term holder supply, okay, we're going to start talking about these folks, right? Short-term holders located between 40K and 45K. So here's the thing. A lot of these people who are even short-term holders, they're in profit, which is a good thing. Now, the long-term holders dominate the 13% of supply held in loss. Okay. And then so these are the top buyers from the aforementioned 141 days of 2021. So basically, we got to think about just the 13% of people that are holding Bitcoin are those top buyers. A lot of other people are repositioned at a lower cost basis. And some of them even repositioned quite frequently between 40K and 45K. So the biggest thing is understanding is like as these coins have been reshuffled. And so in blue, you have the long-term holders, and in red, you have the short-term holders. And here you have the exchanges cost basis here in gray. Majority of people have done their transactions below, like what they're saying, below 45K. So what does this mean? Supply discovery is the thing. Basically saying of this cohort, primarily these people have experienced a full bear run. So the thing is, now we got to kind of look a little bit more context. Now, so they've experienced a full bear run. They haven't sold yet. That means there's conviction there. So the likelihood of them breaking even is going to be less versus someone that's just freshly acquiring in this area as short-term holders, if that makes sense. So the short-term holders are currently in profit by not a crazy amount, but a little bit. And the only thing in the way are these people that have been holding this whole time. So we have to look at the sell side pressure dynamics. Now, the sell side pressure dynamics goes down when we start to get to these levels, which means price can go up faster or easier if demand stays the same. And as we're seeing, this demand from the ETF flows has been actually increasing. So when people talk about, hey, trying to understand the movement of markets, this is how we understand them. Is looking into simple supply and demand, but hey, what is the cost basis of where people bought their coins? So thank you to Glassnode, so we can actually understand this, and I'm able to kind of present it to you guys in like hopefully like an easy, digestible way to understand it. So with that being said, typically what we want to see is we want to start to then see the long-term holders start to distribute to the short-term holders that are just freshly coming in. So let's talk about that. Where, for example, we have these little mountains or these big mountains, for example. So you got the big mountain and the smaller mountain. The big mountain is the long-term holders. How do they interact with Bitcoin through time? Is typically we find that they accumulate a lot up until ding, 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 right? We start to notice that this starts to curve down. So, whether you're looking at whatever cycle, so it starts to curve down the moment you start to get back close to the previous all-time high, and then they start to spend some of their coins, right? Same thing here. It curves down. And then, but this means price is going up because who's buying those coins? Fresh capital, short-term holders. And then, so for example, what we tend to see is, okay, when we see long-term holder supply and loss, that's basically meaning, so here in red, we're starting to see, okay, supply and loss. When they start to get to like nobody is in loss, all of them are in profit, this is when that bull run really starts to happen. And then so like you see these large gradients of like saying, okay, cool. You see, quite a bit of them in profit, and then like, not many of them in loss at the same time. So we're looking for these like these collapses here in red to let us know, okay, things are getting real bullish. So for example, a collapse from here to here. And in that moment where like, hey, basically all of them are in profit, none of them are in loss, we tend to like, stay there for some time. So where we find ourselves today is in a nice spot. Like we find ourselves here where, a lot of these long-term holders, they're in profit. And then you don't want to see any of the supply and loss. And then so we're getting close. And then so what we find ourselves where with the long-term hold supply and loss, we're currently just right about like, total BTC, 777,000 BTC, which is about 6.5% of the total supply and loss. And then when we get to about 1% or 0%, that's how you know, okay, things are get real saucy and we're on the way. So where we find ourselves are like areas of like right here back in 2016 and something similar to like right here, like just right after COVID before we have that hockey stick moment. And so that's a very nice development looking at that. So understanding the dynamics is very important. And this is just saying, the same type of thing. So you have some post-market all-time highs where now the short-term holders start to carry the losses. And so, what do we find is a couple of things, the dynamics of saying, okay, cool. Now you see price ratcheting up, and through time now when that bear market is actually happening, a lot of these long-term holders, they've already exited out at a profit. And then the people that now get, actually like realize losses, these are going to be the short-term holders all throughout like, this bear market until we get that reshuffle. And then now the long-term holders kind of come back into play. So, very interesting to see what are we seeing? We're seeing this time period of where, we're chopping sideways with this metric. And then when you see this collapse down, same thing, that's when you start to really see, okay, this bull market starting to go. So when this collapses down, right, you see the bull market starting to go. So we're in this like this range, boom, before we collapse down. So once again, we're on the precipice of a very exciting time. Okay, so here's the sauce. So let's read this. So the people that we need to say, or here, let me go back on the big screen before I say this. So the cohort of investors that we all need to pay attention to this bull market are going to be the short-term holders. So these are people that have had Bitcoin for less than 155 days. Now, these are going to be your retail investors or the people that are new to the market, people that have not been holding a position for even 6 months or even a year. So they're going to have certain behaviors, very much more volatile behaviors of buying really quickly and selling really quickly. And then so one thing that I've been able to look through the research is, especially on chain, whenever the short-term holders get close to their cost basis as the bull market tends to kind of get going, what we find is we find really good support, and we find very little times that price ever goes below their cost basis in the last phase, like the last year and a half of the bull. So we are on that precipice. So what we need to do is say, hey, if you plan on DCAing anytime from here on out, you want to be DCAing when the short-term holder cost basis is not like several standard deviations of where it is, where price is. You want to get it fairly close to the cost basis. So let's go ahead and look at this information here. And this is going to substantiate my claim. So with that being said, let's read this. So the short-term reset. So for the short-term holder cohort, the sell the news correction after the ETF's launch has resulted in a healthy reset for several metrics. So first, we can look at the percent of short-term holder supply and profit fell from its peak at 100%. So they were all in profit. And then understand there's an all-time average, right, where the short-term holders are about like 57% of them are in profit. That's the average, with the price through time. So this means about half of all the short-term holder supply experienced price falling below their acquisition price, making for a healthy correction, which we're going to have those. So historically, this tends to correlate with the local lows, ding, 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 So let's substantiate this. This is going to correlate with the local lows being established when the market is within a macro scale uptrend. That's what we have, a macro scale uptrend. So key points of notice. Now, when we have these time periods of where we're going up, we have these dips, right? And I'm always on the side of saying, hey, you don't always want to have to wait for a dip, because this dip that comes 4 months later, right, is still a higher price than, for example, here. And so, let's go back. So, for example, like, dips are in the game, but they don't always mean a lower price. Time is a very important thing in a bull market. But with that being said, so as we are looking into this, and here, let me kind of pop myself off a screen for just a little second. So as we're looking at this here, paying attention to the short-term holders percent in profit, this is key, where we have these periods of times where we come to the cumulative mean, which is about half of them. And this serves as nice support along the way. So like here, like here, like here, like here in this cycle from 2016, 2018, and here in this cycle in, we're talking 2020 and 2021, where before we get ripping and running, we find ourselves tapping here with about like 57% of them are kind of in that reset, where half of them are, kind of out of profit for the short term. And these tend to serve as nice support areas to buy and have a nice DCA. If, like I said, if you're DCAing along this bull run, like, you don't want to be buying the local tops in the bull run, right? And so same thing here, when we even had this reset, this flush, and we come back down here, we find that we have just like a very minimal time below this line. Now, obviously time periods like, all of this here. So like all of this in here is obviously the bear market. So same thing, being able to understand the difference in a bear market and a bull market. Now, the interesting thing is we have these times where it kind of oscillates between where above 90% of them are in profit. And like we're saying, the mean of the short-term holders are, somewhere around 57%. So this cycle has proved to kind of be the same thing. So this point in time where we had very little time below this mean here, what do we find? We find that these were the investable, lows for Bitcoin, but everything, all the altcoins, Ethereum, et cetera, et cetera. And then right here in October, before things lifted off. So what we need to do is continue to track this. So here in the Vaults of Crypto, that's what we're doing. Definitely jump on in so you know when to DCA. That's very key when you're trying to position for a bull. And so this is the alpha that you need to be able to have access to. And someone needs to tell you, hey, you don't want to be just buying at local peaks. There's a way to be a little bit more strategic. So, all right, let's check the chat before we go on. There's a couple more things that we could talk about, which we'll talk about this ratio. But let's check the chat really quick. What we got? Got a lot of information here. I like this. Boomer money incoming. Yep, the ETFs are coming. Thank you for your service. And yeah, and Jim Cramer. Yeah, Jim Cramer, we trust. Psych, not at all. Thank you for telling us what not to do. Like literally. What else we got? Got Wade in the chat. What's cracking, my guy? Okay, so we got some call out. So, his top 3 that he's watching: Post-Chain, PostX, and Kaspa. Yeah, I mean, they're all doing their thing. Kaspa has been one of the largest winners of 2023 and 2024 this far, alongside with Injective and stuff like that. Let's see. So with that being said, man, like, things are looking pretty dang nice. Now, same thing. We want to be able to see, okay, when they're at that break even. And same thing, if we find periods of time because now we're looking at the MVRV ratio, so not just their cost basis, but we want to say, okay, like, when 50% of them are, break even or below that, what do we find in any bullish time period? So any bullish time period, so like all of this in here, right? We find that it just kind of bounces off this break even, bouncing off the break even. Same thing here. And then and this is a gift, like this time period in here where we spent considerable time below it, that's a gift. But same thing, it's not like it was a whole year. It's like, 6 months where we had this opportunity. So like 4 months here and then about like a month and a half here. And so same thing, that is not a given. Speaking the fact that we are, a little bit further along in the cycle. And same thing here. We've had just bounce, bounce, bounce. And we had a little duration, like right here before October, we had a good amount of them kind of breaking their break even. But same thing, we just had another bounce. So like that dip from 49K to like 39K, that was a DCA opportunity, y'all. And as we can see, we're already up at 52K. So it doesn't always look like it. Like this cycle, we're seeing where we have these 20 to 22% corrections. And that seems to be the trend. Now, if we have something a little bit larger than that, then great. But the average of what we're averaging is just, that. Anywhere between like 18 to 20% when things do correct for BTC. And so we'll have some along the way. But time is very important. So, there's a lot of things that, we need to really hone in on, and that's one of them. Now, let's see if we could talk a little bit more about here. Let's see. I want to kind of jump over to a couple of things here on Glassnode. And we'll look at it like this. So there's other ways to, look at the short-term holders as well. And I got the all dark mode here. So let's get it. So here we have the short-term holder cost basis. Beautiful. And as we were talking about, we have very little time when it actually is flashing, neutral to below neutral. So let's just look at the last few cycles. So what do we find? We find that in this uptrend, there's just little faint areas of like, pink going below the midline on the NVRV ratio for the short-term holders. This is what you want, right? You want to be the person that's DCAing when, we're closer to their cost basis, not expanding above it considerably. And so, same thing, we've seen this last cycle. I'm talking about this time period was just a small amount of time where we were actually below their cost basis. So we're talking about from September, so late September of 2019 to January. So like I said, 4 months. And then this COVID was another additional gift. We're just like for a month and a half. So from March to mid-April, we were below their cost basis. The whole rest of the bull run, we like slightly barely tapped it for like a week. And then we ain't see it again. Like, so price is going to be above their cost basis. And that's the hockey stick moment. Same thing. This was a gift. China decided to say, hey, no more mining. Everybody in here is going to get in trouble. That was another gift. And then, that was another opportunity from, we're talking May of 2021 to, give or take mid-July. So another 2 months. And so with that being said, what tends to be the theme? Thus far, this cycle is looking a lot more like 2017, where we just kind of blip below it just for a little bit. And we just had really just, since the beginning of 2023, like these small moments, right? To kind of, okay, DCA there and a window for BTC to DCA here. Now, mind you, the alts were a little bit more flat. So you could have been DCAing into alts all 2023. But the biggest thing is that the following. Alts came alive with this liquidity like injection here in October. And so that's the thing. Right now, alts are really going to start to track a lot, more similarly with Bitcoin. And so with that being said, we can continue to use Bitcoin as a proxy and say, okay, how far expanded above the cost basis are we currently? So if we're looking so here's the sauce. I'll give it to you guys here. Watch the stream. So where we find ourselves is we're expanded quite above the short-term holder cost basis. As of right now, as of today, the short-term holder cost basis is $41,618. So this proves to typically be somewhat of a support. So all the people hoping for 30K BTC, I don't know, it may not happen. Now we may have some time periods below it, but like as we can see, we didn't spend too much time below it. Like here, the short-term cost, basis was 28,700, and we came down to just 28,500. So not much below it, and we kept going, and so there may be an opportunity to where we come back or kind of commingle, get close to it again. But as of right now, we're expanding back up away from it. So, asking yourself, how do I go about my purchasing decisions is very important, and we need to watch them. Now, I'll give you guys some more sauce. So we'll look at the net unrealized profit and loss by cohort. And cool thing is we can look at this even for Ethereum too. Let's see. Yes, sir. Taking in the info, appreciated. Of course, pregame before the webinar. Oh, okay, they're having a webinar. Cool. Well, definitely get all the sauce that they got, because they got a lot, but you're definitely gonna get a lot of sauce here too. Good stuff. So now, okay, there's a lot of things going on here. So let's talk about, because we're gonna talk about max pain. So let's just look at the long-term holders first. So we'll take off the short-term holders. All right, and we'll look at the different levels of euphoria. So let's understand what we're looking at. We are looking at, so the unrealized profit. So just basically, where are people holding their bags at? For everyone that's holding Bitcoin. Now, the long-term holders, like we talked about, they operate a little bit differently. And so one thing that we can see is there is a common theme of, like, when do we know things start to get really overheated? So write this down, y'all. So basically, when we're seeing just about like 95 to 96 or above % of the long-term holders are in a net unrealized profit, you should really start to think, okay, things are getting pretty frothy here. And then so that's at every peak. So what are we looking at? We're looking at that blue little circle there. So you see where it says 0.96? That tends to be where this starts to top out, where like 96% of them are in profit. Same thing this last cycle up in here, right? We see about like 90%, somewhere in there. So, kind of taking a look, anything between like 90, 96, like, you're knowing that, hey, this thing's getting very frothy. Same thing with this top here. Like, let's bring that up. 95. That's key. So here in the Vaults of Crypto, we're monitoring that, As of right now, the long-term holders, just about 59% of them are in profit. So behavior is going to probably be something of similar ilk as when, last cycle, the cycle prior, when they're about 59% in profit. So that is going to be, probably, somewhere like this area here, like right before the hockey stick moment, where we are off the low, but we're considerably higher. And so, same thing here, where it's looking a lot more like this 2017 cycle, where we're just incrementally growing. And so, like, at that point in time, right, you're just about like right here. So you're not at the low, but you're not at the high either. Like, you're just kind of like getting past, like, almost to the halfway point, and then things just keep on, ripping and running and having a good time there. Okay, so let's dive in specifically now on the last couple cycles. Now we'll look at the short-term holders. So what happens with them? Net. All right, so let's see. Is this gonna pop up for me? Cool. And we'll take them off. All right. So short-term holders, so as we look at them, they also get into some nice profit as things go up here in red. And no, same thing for them. We see common themes where, when they're getting in severe profit, we're seeing, readings of, we're looking at like 30% of them, 32% of them are in profit, all the way up to, almost dang near like 40%. So that's kind of how okay, these short-term holders, a significant amount of them are in profit holding that BTC. Same thing for this cycle here, right? Starting to see, okay, cool. About 41% of them are in profit. 42% of them are in profit, like significant profit. Net unrealized profit, that's kind of like, okay, things are getting real frothy, right? And then so currently, where we at? So we've only had readings like, this bull run at most. We're only like 22% of them, or like 25% are in profit. And as of right now, we're looking at just about like 20% are just sitting right with a net unrealized profit for the short-term holders. So basically, that's letting me know, yeah, we're kind of like almost at like that halfway point of bullishness. Now, that does not mean like we're at the halfway point of price, like because this is more of a sentiment read for me than anything. Because once we have the bullishness, then we don't know what these numbers can do, right? And so, we're making great progress in that direction. So, looking at these cohorts of people, so it's not so much tracking a coin or tracking someone's account on Twitter or tracking, like we want to track, okay, where does everybody sit in their personal portfolios? And we can definitely use Bitcoin to basically assess that analysis. So things are looking pretty good. Now, one other thing that we can do, since Ethereum is having a day or having a week, let's look and see. Let's see if we can look at like some averages for price. So let's see here. I want to say we have some information. Let me just find it really quickly. We can first look at the, let me see. All right, so let's look at this really quickly. We're going to look at just the price performance since the low for Ethereum. And then maybe we might be able to look at just like some 30-day high low for Ethereum as well. And so it's so interesting how these cycles tend to have very much similarities. Now, obviously that first cycle, so the Genesis cycle up until 2018, you've seen a much higher percentage gain. But like what I like to look at is orientation and gradient of the chart. Is we're getting to that time period of where things start to get very exciting, right? And then so, you have a lot of accumulation for the asset for Ethereum, but now we're starting to have that time period because like even here, like where you had this high, so this high right here in 2000, I want to say like this is like 2019 before COVID. And then we had some time it took before us to kind of like break through it. And then we start to break through it. And then we start to have like those big pushes and this like incremental gain throughout the cycle. So same thing here, like we've been having like this high of about like, $2,500 ETH, and we finally are starting to break through it. So having this moment of, liquidity rushing to the upside. So the next target for Ethereum is about like $3,400, y'all, which is nice. And so, if we were to kind of outlay just kind of how this thing is looking, this is taking us to some bullish times for Ethereum, up until, like, and because we have this cycle stalled out, a little bit early, right? But if we're kind of comparing it to the last cycle, we're seeing, we're talking spring going into summer of 2025. So we still got a lot of runway. But as you can kind of see, to its all-time high, right? This is just nuts. Like, at the beginning, all the way up to 2018, these people are locking in, 1700x, all that jazz. At this all-time high, up basically 53x from the low. So, same thing. If we were to have this similar gradient, percentage-wise, it's not necessarily going to be the same. But, and let's say we have diminishing returns. We don't we don't go up as high, but this is leading us to that $7,000 ETH, that $10,000 ETH, which from here, that's still a nice value in appreciation if you're a holder. So just looking at this as far as gradient and how are we compared to the other cycles in movement. And we're just trekking right on along similarly to these other cycles, which is nice to see. So let's see 30-day high, low. Let me see if we can look at, because I know we can see that for Bitcoin. I want to say we want to be able to look at that for Ethereum as well, which I may have to do a little bit of adjusting here to see that, which I don't mind. So let's look at some of the just the averages. So we're basically taking the average range of the price over the last 30 days, and this is going to create a Bollinger Band for it. So for Bitcoin, and as y'all can kind of see, this is an on-chain type of stream today. So as you can see, you want to interact with the asset when it is on the lower bounds of its 30-day average. So for example, we had periods of times where we've come and kind of touched down here at this red line several times here. Like this was, time to be accumulating around here. Same thing. We had that opportunity, time to accumulate here. The times that you don't want to be chasing, for example, is like now. Like we're at the higher portion of the 30, day average here. So here, time to not be chasing was this time period up in here, all of this up in here. So for example, there's times to do things and there's a time to just sit back and enjoy the show. And, and so it's like beautiful because I've been doing streams of like, hey, get ready for the bull. Like this is not playing around this time. Like we're really going, and we had this nice expansion, this past few weeks. So it's been beautiful to be positioned already and to be the beneficiary of that. And so, what we can do, let's see if we can pop Ethereum in here instead for this metric. So let's replace this. Let's see if we can get some instead of going for Bitcoin. And then here's the thing. We could look at some other things too. Average. I mean, there's other alts that we could look into, but guess what? Lots of crypto participants, they'll be able to look at their altcoin specifically and say, hey, like, how can I DCA more efficiently? Having something like this in your repertoire. So I'll throw some fish out there and let's eat off of this. So let's see here. We want to look at, guess we can use market cap, or can we just use price? Price. Boom. Place. So let's see if it gives us some relevant information. And so, yeah, I'm going to go ahead and play with this so it can give us a little bit more accuracy, because as you can see, it kind of took things and kind of whacked it out a little bit. But, this is like the beautiful thing about kind of understanding how to utilize this stuff. It'll probably take maybe about 10 or 15 minutes. I don't have time to do it on stream, but I'll kind of, queue this up and we'll be able to look at Phantom, and it's, 30-day rotation, and so we'll get into that some other time. But these are the things to look for. And now, with that being said, having a little moon math is always kind of fun. And there's a couple ways that we can do that. So we'll kind of start here. And same thing, this is going to tell us some other things too. Another level, so kind of write this down. Another level that tends to be some pretty good support as we kind of trek on through the bull is going to be the 111-day moving average. So same thing here. The 111-day moving average is here in purple. We see we get close to it or bounce off it here a couple times, then we go. Same thing here. We bounced off it once. We bounced off it twice. We had a little bit of time below it. That was like the time to really, get some nice DCAs into your alts, and then things rip and run. We bounced off it again. So 100, if you're like, hey, I don't know how to track the short-term holders, just go on TradingView. Go ahead and pop in the 111-day moving average, and there's another way to do it as well. So the biggest thing is, what do we have? We have all of the moving averages, the slower moving averages and the longer term moving averages. They're all moving upwards. So they're not moving sideways. They're all now starting to curve upwards. And that's the beautiful thing, because that they're going to provide a lot of support if we do have any type of movement to the downside. And as of right now, even the 200-week moving average is at 30K. And so the chance of us coming back down to the 200-week moving average after the low has been in, it would have to take a black swan for that to happen. So I'm not going to say there's not a chance, but a black swan would have to happen for, this cycle. And I don't know, we haven't had it quite yet, and that's not a guarantee. So we'll continue to look at that. So now let's look at a little bit of moon math here. And we're going to use on-chain data for that. So typically you're going to have standard deviations above the MVRV that get hit for, whatever asset we're looking at, Ethereum in particular. And definitely, y'all, if y'all are enjoying this, please smash the like, smash it. We got to get this information out. So now, as we look at this ratio, we find that there's periods of times when we are overvalued by 2.4x and 3.2x. So essentially, the way that we can kind of read this is, in blue, we are undervalued. In green, we are at a fair value. And then when we start to head to those time periods where we get to overvaluation, we start to hit the orange and then red. So we're not there, but we're making way. And then, so what do we find? We typically find, if you're using the last two cycles, for example, we typically find us being crossing. Once we cross that orange portion, we don't go back down to green until the bear market, and then we straddle between orange and red for quite some time. So in this cycle, it was from March of 2017 all the way to January of 2018. So just about 10 months. Same thing here. We get above, this orange, or I'm sorry, it's kind of of a brown. So a burnt brown. So basically 2.4 times the valuation of the base for the MVRV ratio. And we spent it from December of 2020 to just about, November 2021. So same thing, another 10 to 11 months. So, man. And as you can see, as prices ratcheting higher, so, does this metric, where it ratchets higher at a nice gradient in the same cases of the bull run. So where are we currently? So as of right now, it's already in between 2.4 and 3.2. It's already between 4,000 and 5,300. So basically getting back to the all-time high. Once we do that, it's going to spend a whole year just going up. So almost 10 months to 11 months, that's something that we can consider. So we're making progress and making way towards that, getting back towards, this level. And so that's, I'm saying, getting back to 4K. And so the thing is to kind of understand that once we get to 4K, it's just going to keep straddling in this channel. And you got to ask yourself, am I positioned before that point? And you got to ask yourself, what other altcoins should I have before Ethereum hits this point in its MVRV ratio? Because, what is going to happen here? So for example, now if we're just looking at price, so what does it do? For example, this all-time high, we're seeing it got all the way up to the top of its, 3.2. So just about under $1,000. It comes sideways. But then it does a whole other step up and legitimately, finds itself where it's kind of touching the top end of that 3.2 at just about $4,000. So a 4x on price. So maybe we do something similar where we do a 4x on price or maybe just a 3x on price. So if this is going sideways from this point, so just about like $5,000 on that step up, 4x would be about 20K. Or maybe it's a little bit less bullish. Maybe it's 15K. Let's just say it's even half of that, and it's just 2x on this gradient higher as it treks up, and $10,000. So that's kind of how we are seeing how this thing is moving, and that's just that's pretty good, because once you have $10,000 Ethereum, you find the market cap of that, and then you say, okay, now where is my alt gonna be in comparison with its market cap, and that's how you start to do the moon math. So things are looking pretty nice, y'all. Asking yourself, time is very important. How much more time are you going to take? Because typically when we're in kind of like no man's land between green and like this burnt orange, typically, we spend more time going towards the orange than we spend time going back down to green. Like in both scenarios. Like once we break this area, we know we're spending, this push going to orange pretty rapidly. So we're almost there. And, once halving comes around, maybe within, if I'm to give an estimate, I think we over the next 4 to 6 months, we should be here, and that's very conservative, really just going from 3K to 4K. So, things are looking pretty good, very good at that point. So, if you guys haven't asked the question, what do I need to be watching? Who do I need to be watching? I wasn't talking about YouTube streamers, and a lot of people have a nice body of work. You need to look at, hey, the people that are interacting with these ecosystems, what are they doing with their money? And that's going to be the best indicator for you to understand, okay, how should I move with mine? So, a lot of good information. And this is just basic, looking at on-chain data, and I'm hoping to make this stuff easier and easier to understand as we look at it. So what else we got? What other news can we look at? We have some developments. Let's kind of see. Let's see here what we got. So let's watch some things here with Watcher Guru. What did they say here? Capital One to acquire Discover. Okay, I mean that's just some normal TradFi stuff, nothing crazy there. Interesting. The UK to release new crypto and stablecoin legislation within the next 6 months. They've been saying that for some time. Let's see if they actually get to move on it. And of course, thank you, Jim Cramer.
Could argue that now it can't even be held in banks. Bitcoin's a strange animal. I will say point blank, I think it's being manipulated up. It was being manipulated the whole time by Sam Bankman-Fried. So please don't assume, therefore, that it's not still being manipulated. And I would sell my Bitcoin right into this rally. And believe me, I had been a believer one time in Bitcoin. Not here, not now.
This guy is a flaming idiot. That's hilarious, man. It's literally just don't even, anything that he says, you can exactly do the exact opposite and you'll do great. So bonehead, very interesting. So, typical stuff, I mean, just basically tracking the ETF inflows. We've had a couple of days where the market has been closed, but tomorrow things are back popping again. So, you're going to be able to see some things. Ooh, what is this? No way. What? Okay, new development here. Sam Bankman-Fried basically making some friends. No way. This guy, he got some friends in prison. Man, oh man, money can buy you friends in prison. That's so crazy. These guys are looking out for him. This is hilarious. Oh my gosh. I feel bad for him because he's going to be in there for a while, but it's just like the fact that you got to hire people to protect you in prison is not a good feeling. Like, this is crazy. That's hilarious. Okay, thank you, Tiffany Fong, for the photo cred. That is crazy. Somebody got to put that on the shirt. That's pretty funny. What they say, he gonna be in there for a while, y'all. Like, it's not just a little bit of time. He's gonna be in there for a minute. Yeah, that's pretty crazy. Yeah, like, not seeing too much crypto stuff that has piqued my interest as of today. Right? Like, just typical NFT stuff, which, don't try to pay too much attention to that personally. What they got? Goldman Prime. Hedge funds just bought the most tech stocks in over a year. Interesting. Keep that in mind. Let's see, what is Elon talking about these days? Elon Musk. What all Elon have to say? Oh, is he doing he's doing some stuff here on Twitter. Conversation. Let's pop in. I wonder if it's crypto related. Doubt it.
Sure, answer.
The another question. Do you have any updates on the Neuralink patient?
Yeah, I'm not. I don't want to use this to sort of break major news on that. But
yeah, no worries.
Progress is good. Progress is good. Patient seems to have made a full recovery with no ill effects that we're aware of.
Okay. So he's talking about Neuralink, some other stuff that he's dumping a lot of money into, things that, we'll see where it goes. But actually, I did want to actually stop and talk about this, and we'll probably end here. So now we all have to understand the psychological effects that social media has on us, believe it or not, the way that we see things, the way we go about life, and understand there's always an agenda, always. Definitely, because I started watching this. I'm actually going to probably finish it tonight. I started watching this documentary here, and you really got to understand, as you shape the way that you go about handling things here in the future, in this next part of the decade, you definitely have to see that a couple things are happening. They want us to just go along with the flow, don't say nothing. They're going to try to essentially just give us propaganda after propaganda. They're going to keep raising our taxes. They're literally going to do everything that's probably not in our best interest. So you have to have a filter, say, hey, what's bad from good? Have your moral compass. If you have, your religious belief, I definitely would say hold on to that tightly, because this stuff is becoming just pure degeneracy. And they're just out in the open with it. And we have to understand that it's just like, for us to have the convictions and the right things, if we want to go to the promised land, we have to understand that, we have to have the right actions. To have the right action, you have to have the right mind state. So a lot of these distractions, definitely be able to tune them out or to stay away. You got to focus on the plan, the focus on the goal that's going to help yourself and your family. So that means becoming financially literate, but then also becoming a person that has prosperity within finance. That way you don't have to be under submission under a boss that says, hey, you got to be doing this. And here within this place that we work, we're going to be, advocating for this propaganda. If you don't like it, then we're going to fire you. You want to have your sovereignty to a standpoint to where you say, you know what, if I don't want to have to listen to this, if I don't want to have to do this, you don't have to. And, this documentary is going to do a lot of shedding that light of, hey, how these tech companies, how, these clothing brands, how this music, social media, all this stuff is here to get your attention and get your dollars, and then create you into a robot that has the beliefs that what they think are right. So with that being said, it's your choice. Choose wisely. Definitely choose wisely, because understand that it's a game until it's not. And so, you'll be surprised what kind of gets downloaded into your subconscious. So watching streams like this, what I'm trying to download to your subconscious, look after yourself, look after to the people that you care about, work hard, get as much of your dollars that aren't going to do nothing for you, because they're not going to stop printing. That's a part of the whole facade. They're trying to act like they're here to help us, but they're never here to help us. They want to keep us subdued. They want to keep us in our same like states of just needing them for everything. Crypto is the opportunity where we're not going to need them for much longer. They know that, they're seeing it. So they're fighting even harder to try to get the next generation. So if you got kids, especially, do everything that you can for them now. Like, don't wait. Don't wait, because like things are going to be way different in the next 10, 20 years. And then so you got to have a fighting chance. And to have a fighting chance, you got to have finance. You got to have some assets. You got to have something that's producing for you, or else technically you'll be a slave to their system, you know? So with that being said, I appreciate y'all for coming through. We have a nice short stream with this one. We'll be back Wednesday around same time, just about like 8:30 Central Standard Time. And we're going to get into more things, right? And as we continue to go in this bull, right? And I didn't even look at Bitcoin price today. Understand, you got to do this one thing. Embrace the bull run. All right. So appreciate y'all's time. And yeah, I'll catch y'all the next one. Peace.